Kevin, I'm really curious here as to at what point some of these food prices start to calm down.
I think as we look forward into 22, I don't think there's any relief in sight for consumers at the grocery store. As you mentioned, across the board, we're seeing higher prices. Last year, it was more of a story of supply chain disruptions, more of a story around constraints in the ag processing sector, like meat supply chain situations. But now, as we enter 22, it's really starting at the farm level. We see higher fertilizer prices that are up 3 times from what they were last year, really driven by kind of energy problems. We see farm chemical prices, a lot of the inputs that farmers are buying, up 4 to 5 times from last year. Again, constraining production. And so, as we look ahead into 22, I think consumers are going to expect to see more and more price inflation coming on their food ticket.
In terms of what farmers can do about this, Kevin, Deere is selling a lot of new kit at the moment that is much more efficient. We're seeing farmers shifting the type of planting they're doing. In terms of what can manage this process for the farmers, what are the best things that they can do? What do you expect them to do?
At FBN, we've been talking to our farmers quite aggressively about, really locking in their input needs for the coming growing season. I know prices are exceptionally high right now, but we don't expect them to back down, and we don't expect availability to really improve in the coming 6 months as farmers enter the planting season. So, we've been telling farmers to get really aggressive around their locking in. And we saw, as we talked to farmers this fall, a lot of them are kind of sitting on their hands around fertilizer. And fertilizer is so vitally important for corn production. And so while they got some fertilizer applied this fall, they're going to need more heading into the spring. And they're kind of sitting on their hands to see if the back down in natural gas prices will improve the fertilizer market. But it's a little bit like Russian roulette. So we'll see what happens in 3 to 4 months when they get to the field.
It's interesting. I'm wondering, some people call these supply chain issues, but when you think of fertilizer, you also start to worry about global trade. How much is the trade network a concern when it comes to what's coming in from China and other nations?
That's a good question. I mean, China and Russia both are major fertilizer suppliers to the world. And as we saw this kind of fertilizer crisis looming in the last 3 or 4 months, both of those countries put on restrictions, trying to own internal inflation. So they're really kind of the throttle on the amount of fertilizer they were going to export to the world market, trying to be a little protective for their own domestic situation. So, we'll see as we get into, natural gas prices have backed down some. Maybe some of these issues get worked through. But again, as we are looking at a 3 to 4 month clock for farmers to need fertilizer, I'm not sure there's enough time to really change the paradigm of really, record high fertilizer prices.
Kevin, what do you see in the protein markets? Obviously, feedstock is critical. That we've already talked about in some respects. It's going to be more expensive as it works its way through from field to animal. In terms of what we're seeing elsewhere as well, you've got avian flu remaining a significant factor as well. I'm just kind of wondering where you see the protein market going. That looks like it's even almost more challenged than some of the arable crops.
Yeah, I mean, a great point, Guy. I mean, like I said, last year, the protein and what consumers were seeing at, say, the beef aisle was really around supply constraints. Beef packers really couldn't get the labor they needed. They were really constrained in that sense. But now, as we enter 22, it's really kind of at the farm level, at those livestock producer levels. We saw major droughts in kind of the northwest part of North America that kind of forced some liquidations of livestock herds. We see livestock numbers coming down as a result of that. We also see livestock numbers kind of constrained because of rising feed costs. So I think 22 is going to be a story where it's really starting at the farm gate level with higher feed prices, transferring into livestock, meat and poultry and dairy. That's going to kind of hit the consumers in 22. So I'm not sure we'll see the big gains we saw in 22 like we saw in 21, but I don't think there's any relief in sight. And so I think, price increases at the food level will be there.